Hello, as regards the video you requested after my last video, I really don't know exactly the details you are seeking, but I spotted an example of liquidity inducement on EURUSD today, and so I just want to share. Probably it may be of value to you. Okay, so we have the schematic as shown. We were in an uptrend with a bullish break of structure here, and we also have a bullish break of structure, most likely sponsored by this down close candle, which is most likely a demand zone. Okay, you can see that we have this move clearing the liquidity, the sell side liquidity, and then breaking structure to the upside. So my expectation was a price will trade back to this zone, and we hope to see what? We hope to see, let me just draw some kind of reaction that will take price up. Okay, that is what we hope to see. Another side of it is to see whether this demand zone is going to hold or not, and eventually, as shown in the schematic, the zone failed. And what has happened? We have a demand to supply flip, demand supply flip. Okay, so it means that this supply has now overpowered this demand. Okay, and immediately we see this, or we saw this, then we now know that the market has changed environment from the bullish scenario to the bearish scenario. So after this break here, we are bearish. Okay, so we have the bearish bias after that break. So what we need to do is to identify this supply zone, okay, and start looking at how price is trading towards it. Price is making an upward movement towards that zone, and then we have a change of character. Okay, that means the lower high has been traded through, which suggests to us the change of this uptrend. And you can see that I wrote here fully mitigated. This is very important. Okay, fully mitigated. That shows that this could very well serve as our strong high, because it's the last point of true mitigation. So we have a change of character here, and the main point of this video is this part. Okay, we have a change of character, then we have this move upwards, this swing upwards, reaching this high. Okay, now we expect this high to be able to continue this move to break structure, but instead what happened, this high could not trade below this low. When this happens, most likely it tells us that it's going to be traded through. This high is going to be traded through, and so this is the liquidity inducement we are talking about. Okay, so if you want to enter, the safest and way to enter, or the surest way to enter, is just to put your, you can set your limit here at this level, and you can put your stop loss above and target wherever you want to target. So that's exactly what happened in EURUSD today. So once again, because this move downwards could not clear the liquidity or could not break the structure, then we most likely suspect that it's going to be liquidity inducement for price to actually run through and continue its downward movement. Okay, so with that said, we move on to the next slide. So this is exactly the scenario I was talking about. This is the Asian high. Price came, traded above the Asian high. Okay, most times this is the London session. In the London session, there is usually a high level of manipulation. Okay, when we see this, we might begin to think, oh, it's time for us to buy. Okay, sorry, let me say this. When we see this break of structure here, you can easily set your limit here and expect that this is going to be a strong high. But you can see what happened. Price came, cleared this, traded above this high, and can easily stop you out. Okay, now what we are looking at now is this is actually a demand zone that led to this break of structure. Look at this zone, this down close candle from this point to this point. Okay, it's a down close candle, and we expect price, if price was to continue upwards, we expect price not to just trade into this zone then pick up. Okay, but what happened is the reverse of our expectation. Price ended up trading below this low, and immediately we saw this, we don't know that we are in a bearish scenario. Okay, we are now in a bearish environment. Okay, all right, so what we now start doing is to look at how price will trade to this point of interest that was identified. Okay, and now we have what, a change of character here, and we have this move that was supposed to continue this move by breaking the structure, but that wasn't the case, and this becomes our liquidity inducement. And so we can enter here. If you want to be very, very safe, put your stop loss beyond this level, and you can see that you get something quite nice, as in this case. Okay, so that's the point I really want to make, and I believe you are able to grab the logic that I'm trying to explain here. All right, so that is how simply you can look at liquidity inducement from time to time. They are everywhere in the chart. You can able to see this as well, the liquidity inducement for this particular point of interest that is here. You see price trading above it, just like that. You can find them on the chart every now and then. Okay, then I just want to explain some entry pattern that you might be interested in. Already we've seen this. This is the point of interest. Price traded into the point of interest, clear this liquidity, and traded downwards. If the price ended up trading lower than this liquidity, we'll suspect that there's liquidity grab here. Okay, the next thing we're going to be looking for is price to trade below this short-term low to confirm the bearish move. Okay, and we are also going to focus on the leg that led to the break of this short-term low to find what imbalance. Once we find imbalance, we expect price to trade back to that imbalance, and so we can use that as our form of entry. Another one that I also usually like to use is where we have, first of all, a change of character after price has approached the higher time frame zone. We have a change of character on the minor structure. Then we now wait for another break of structure in the direction of the change of character to confirm the move. Okay, in this case the bearish move. By the time we get the break of structure, we can now try to look for any very nice zone or imbalance that we can actually trade from. Sometimes you can see that even after the break of structure, after we have the change of character, the break of structure, price could still violate this high, because there might be existing some liquidity that price wishes to grab. So take note of that. Okay, in this case we assume that the liquidity has been cleared. Okay, but in this case liquidity above this, there are liquidity resting above these highs. We assume that okay, there is no liquidity per se that is needed to be cleared, that is resting above it. That is why you can decide to take the trade here. So these are just several scenarios that you can actually look at. I'm sorry I'm not so fully feeling well, and though I hope you get the point. If there's anything you think you're not clear with, or if you already understand this and you want to ask more questions, or you want to make me understand one or two things, you're very much welcome. Once again, thank you.